Hi, welcome everyone who is joining us to watch this webinar and panel on the fact that your employees need help, particularly how companies can provide better financial guidance during this pandemic, during COVID-19. I'm Helen Calvin. I'm the Chief Revenue Officer at Jellyvision. We're the makers of Alex, a software that helps your employees make better decisions about their benefits, their healthcare spend, and their financial lives. We are particularly interested in this topic in working with employers and employees, how they navigate this new world paradigm we find ourselves in. And I'm joined by some really great friends of Jellyvision, some compatriots from the market that we're really excited to talk to today. We've got Jason Kessler, Senior Vice President and Director of Product Management at HSA Bank. Will Seeley, who is the co-founder and CEO of Summer, a company helping borrowers with student debt. And Mark Chapman, Vice President of Total Rewards at Red Robin. So really excited to talk to you guys today. Thank you so much for joining. I'm gonna go ahead and have us dive right in. Financial wellness is really interesting. You know, starting about 7 to 10 years ago, maybe about a decade ago, we started to see this trend of employers beginning to understand the gravity of the financial strife that many employees were dealing with. And they started making financial wellness a priority. It was almost sort of the germination, the origination of that term that we now all use pretty regularly. That was already happening. And then lo and behold, 2020, a pandemic hits and maybe changes things. I'm curious how you think COVID maybe has changed the way that employers and the markets at large are thinking about financial health or financial wellness. Jason, I know that HSA Bank, this is something you guys talk about a lot, right?
Yeah, absolutely, Helen. And first, let me say that I think employers, for the longest time, like you mentioned, wanted employees to be more engaged with financial wellness. But in the past, the driver for the engagement, quite frankly, was their own bottom line, or in the HSA or healthcare world, centered around what we would say is bending the cost curve on healthcare. But right now, so many consumers are asking themselves, am I prepared for my next financial health emergency, or can I afford that next rainy day expense? You know, from an HSA Bank perspective, especially during this current pandemic, we're encouraging our clients really to sit down and have all their employees do a financial check-in during this upcoming enrollment season, really emphasizing the idea of not picking the same health plan as you did in previous years, really doing the math, factoring in premium savings, tax savings, understanding more about the ways employers are contributing to those accounts. So in essence, really kind of a double down on the financial wellness angle, but of course from a healthcare perspective, since we know that there's tons of employees over-insuring and not really getting the most out of their current benefits.
Yeah, on the healthcare side, benefits being this part of their income, a pretty substantial part of their, you know, the money that they get every year, and maybe not being maximized. Will, have you seen anything different on the debt side? You know, the sort of the alternative side of the coin from the income. How has COVID changed the way markets thinking about sort of the debt that people were potentially already saddled with?
Yeah, it's a great question. And I'll actually just harken back to the root of your question, which was, you know, over the trend over the last 10 years. I think if we all recall the last financial crisis starting in 2007, 2008, a lot of employers started to look around and say, what is our role to play here for the employee, thinking not just about the human health, but the financial health of their employee in a more well-rounded perspective. The work that we do at Summer was really born out of that crisis, which, as you know, we saw the mortgage crisis take hold. People started to look at debt products, saying there's a lot of consequences here when people can't repay. What is the next crisis going to be? Summer, we're focusing entirely on the student loan crisis, which arguably could be the next one. And we've seen headlines across saying, you know, student debt is a massive problem. It's $1.6 trillion for 45 million people. It's getting worse every day. Obviously, the president had an executive order over the past weekend continually extending a freeze for some type of certain types of federal loans, which has provided some short-term relief, but the debt remains, and it's going to continue to be a problem. And so when we think about the employer's perspective on financial wellness, we have to think about, put ourselves in the employer's shoes. And we work with over 100 employers. And when we talk to them, one of the things that they're realizing is that people it's household income. So their employees may have a job, but their spouse lost a job. And suddenly the household income has dropped significantly. Or they're lucky enough to both be employed in a married situation, but their grandparents have huge health concerns right now because of COVID. Or their parents, their kids' grandparents. And, their kids, they're taking on extra expenses to supplement the education for their kids because their kids were pulled from school that's not meeting. So all these unexpected expenses are arising, coupled with the fact that income has been impacted in many ways. And student debt, along with mortgages, credit cards, auto loans, it can drag down and create a more risky scenario for those involved. So the way we focus this is trying to help the employer navigate that. We try to create a very low-cost solution that leverages a lot of existing resources so that the employer is not paying for these benefits that save borrowers money, but we're working with them on their behalf to find federal and state loan assistance programs that employees wouldn't know about and enroll them in those programs that can significantly lower their debt. So for us, that's the Goldilocks solution that makes it easier for the employer to save money, but leveraging a lot more resources for their employees, and that reduces the financial stress and uncertainty for their employees thinking about their lives holistically.
It's interesting you talk about that household income and Jason sort of alluding to, the benefit side, which hasn't, even before COVID, hadn't been being used to its full advantage. And now we've got the problem of household income, even if it's not the employee, their whole family might be struggling. These are all things, it just seems like gasoline on the fire, right? We were already starting to have some problems, and then gasoline on the fire. Mark, your great position on the employer side, has that changed maybe how you were structuring or framing your financial wellness goals? Have they iterated or changed, or has it just brought it more to the forefront?
Yeah, well, of course, we're in the crosshairs here in the restaurant industry of the whole pandemic, and the effect was immediate. We had to really take advantage of some programs, of communicating some programs that were available from the government. Normally, I would never advise an employee that they had alternatives, publicly anyway, that they had alternatives for a loan or a hardship withdrawal. And some of the advantages that the government had implemented and made available to employees that were struggling financially from the pandemic. So our first reaction was to educate employees who were operating in an uncertain environment where they had their hours cut or potentially laid off, what alternatives that were available to them to supplement their income. So the 401k, IRS changed the 401k. We educated them on some alternatives regarding healthcare and COBRA alternatives to the employees. Unfortunately, the pandemic is also impacting some of the education that we would love to do to the employees, just from a cost perspective. We've had to delay some of those things into the future, but hopefully we recover and are able to get back on track on some of our plans.
It's interesting you say, maybe delaying some of the things that you wanted to focus on. I think what's hard here, right, is what's interesting is, while at the same time this is gasoline on the fire, employees are being in more dire situations, it also seems like there's a little bit of a wake-up call in terms of employees' willingness to pay attention to some of the messaging. We've been surveying employees about their benefits and sort of those concerns given COVID. And actually, our recent survey showed that nearly half of employees are worried about their financial situation. That's not that different from what we'd seen pre-COVID, but more interestingly, 66% said that they would pay more attention to their benefits this year due to this increased financial strain. So with that kind of being maybe the new normal, I'm curious, Mark, when you are saying some of these specific initiatives, you had the immediate talk about their levers with 401k and hardship withdrawals and things. What are the 2 or 3 specific initiatives that you think might work this year that you've been focusing on putting into place?
Yeah, I think informing employees who might be spending a little bit too much on healthcare. We have about only about 20% of our employees drive about 80% of the claims in our healthcare, right? So, and we have some real premium plans and then some high deductible plans. We offer 3 plans. So really educating the employees on their alternatives. If they're not using that, and should they consider going into a lower cost plan, and really educating them on those alternatives. And then just instilling the advantages, disadvantages of different savings plans such as 401k, and again, their alternatives if all of a sudden they have to change their savings needs, and what alternatives are available to them. And then really, trying to educate our managers on how they can maybe accommodate our employees' earnings needs better. So, we're kind of in this gig economy, and we allow, in our industry, educating managers on how they can position their business to meet the needs of the employees from a scheduling standpoint, earnings standpoint.
Yeah, and how managers can help through some of the through lines of these messages. That's something we talk about at Jellyvision all the time, is you can have a lot of corporate initiatives, but often it's kind of that frontline manager who can help with some of these. I was thinking particular, Jason, I know you guys at HSA Bank have a lot of thoughts about, Mark's talking about these different vehicles and what's available for you, and certainly the HSA in terms of liquidity and flexibility and rollover is a piece that during times of economic strain, we sometimes see people lilt a little bit more too. Is that kind of where you're thinking about employers focusing their time?
Absolutely, and especially in the current environment, employers are looking for things that are actually going to make a difference, and both in the short and the long term, right? The HSA itself has certainly gotten renewed attention. You mentioned a few of the advantages, but the portability of the account in uncertain times, and the ability for consumers to take those funds with them and to pay for health insurance even when they're unemployed, I think kind of sends an interesting message. On one hand, I think as much as we would like to believe, we may not all be employed by the same employer for our lifetime. So thinking about benefits instead of an annual event and more of a perennial event, and thinking about the HSA as something that can deliver immediate value, but also long-term value is definitely becoming more and more attractive to our clients. I'll also mention some of the hidden features of the HSA are becoming much more popular, like the ability to accelerate contributions based on an amount that the employee elected during open enrollment, right? So this tends to come in handy when employers introduce an HSA qualified plan in the first year, as employees worry about expenses that they incur very early in the year before payroll contributions hit the account. So things like that are starting to get more attention because they can make an immediate difference in the lives of the employees.
I think this is slightly switching gears, but you talked about just the lives of the employees. And I think, we're talking a little bit at the macro level. What is the market trying to do? What are employers trying to think of? I think we can't lose sight of the real stories that are happening in terms of employees and their finances. And I know, Will, you guys at Summer, you try and keep a real heavy pulse on this because it's the actual spending, the actual financial outcomes that people are dealing with. I mean, what are some of the stories you've heard about the effects of the pandemic? How do you factor those into how Summer is thinking about this new need?
Thanks for the question. I think it's an important one. The way we structure our business is that we're helping the employer help their employees. So we get the perspective of both touch points, the employer and obviously all the folks that are impacted on the front lines of this COVID-related financial crisis. And, one of the things that we often do every week is tell the stories of people we're helping. It allows us to refine and improve our product offering and really be, customer driven. And so some of the stories that my teammates have shared recently, we've been helping a teacher who's had significant cuts to her salary. And she, in fact, unfortunately has a husband who is a medical professional. And he's been working night and day in the hospital fighting the pandemic. The stress in their lives is at an all-time high. They're really worried about their finances for the company, and the savings that they had put aside are shrinking. And they've had to, have some really tough conversations, but there's little patience to kind of figure out, have to go through all the paperwork. So when we came in and presented an option to them that assessed their situation and immediately freed up money by reducing their student loan payments from the nursing and teacher degrees, they were jumping up and down because, we were able to streamline a lot of complex information and paperwork. And then the employer was incredibly happy to see just the outcome of that. We've talked to a lot of folks who've been, having to actually do some part-time work to supplement. They're at half pay or half time. I know Mark was talking about sort of the restaurant industry. We see a lot of folks in and around the gig economy having 2 or 3 jobs trying to get by right now. I think everyone's hyper aware of the federal unemployment benefits being in this unclear environment. And I think it unfortunately means that employers now have to kind of think about, what are they going to do when there's uncertainty in DC? So we're just constantly mindful of the people who are experiencing this on the front lines. And, we can supplement the employer's ability to get the best possible information out. And I think if you're an employer listening and you're thinking about I get it, it's hard. What am I to do? I think any information is better than no information. Talking and communicating, transparency. Inaction can be seen as, a lack of interest or a lack of care. People would rather you just provide something and show that you're trying than to not engage on that. So that's one of the things we've been helping the employers we're partnered with is, what can they share? How can they share quickly? And just seem to their employees like they're paying attention and they really do care.
I think,
if you don't mind, I'll just pile on to what Will said, because I think the little things matter. We may not be able to, refinance a student loan at HSA Bank, but we know people are stuck in their houses a lot. We know that they can't access healthcare in the same ways that they used to be. So, we took some immediate action. We tried to promote a lot of our online partners that maybe took the place of some of the brick and mortar partnerships that we had in place, making sure consumers can actually use their HSA dollars if they still want to. We worked with companies like HSAstore.com and GoodRx. We got a $5 or a $10 coupon immediately issued to all of our customers, and actually saw over 100% increase in traffic to the online store. So we know people really appreciated that, and we're really able to take advantage of something, even though it was kind of small, showed that we were paying attention, and really the employers ended up looking like the heroes because it was on their behalf.
I think that's so important. Will, you're talking about the unemployment rate, and we talked about how some families, maybe they used to be dual income and now they're single income. One of the things that gets woefully underreported is not just the unemployment rate, but the underemployment rate. How many people had to take jobs or roles out of necessity that maybe weren't at the same income level or the same job level that they had before. So programs like you're talking about, Jason, employers really putting those into place, leveraging them from their vendors, because employees need to be getting as much out of the jobs they have as they possibly can as cost-saving mechanisms. I'm curious though, Mark, I want to hear your opinion on this.
Yeah.
We're talking about, oh yeah, just do this, do that, do the other, add all these things. And as you talked about, many employers, Red Robin not excluded, there's a little bit of survival mode right now. You're trying to limit spending on initiatives. You really need these sort of clear short-term ROI things. Financial wellness, or some of these programs that sort of help employees right now maybe don't show employers immediate ROI. How are you threading the needle? How are you evaluating whether you should or shouldn't take on some of these initiatives?
Yeah, well, we're hoping to take advantage of kind of the what we're on today, a Zoom environment where you're able to reach out naturally to a number of people, at one time. We operate in 40 different states. So as we go into open enrollment right now, we are planning kind of virtual open enrollment. Our offices are effectively closed through January, so through our open enrollment. Normally we have an on-site open enrollment, and then you utilize Workday. We use Workday for communication to our field employees. But we're hoping to engage more field employees through this Zoom environment, educate, and looking forward to that, and really just taking advantage of communication tools that are already available. We started to embark with some educational partners to help us with financial education, and we were gearing up to aggressively embark on that. But as you mentioned, due to our budget constraints, we're going to have to dial back. But during that whole process of starting to put presentations together on financial education, what we realized was current vendors, such as our 401k vendor, our HSA vendor, our healthcare vendor, already have a lot of tools available to them. So right now, really just focusing on presentations where we can put together ourselves and leverage those tools to use. So that's kind of where we will be moving here in the near term until we're back to regular operations.
Yeah, until you get, it's so funny. I've been working at Jellyvision nearly a decade, and of course our solution is virtual, sort of mimicking the conversation that you would have with a real human. And historically, that's really been about ease of distribution for the employer. How do I reach many employees in a personalized way? And then COVID hit, and we went, funnily enough, this, and I think that's this digital transformation that has been a little slow in the HR space, and people have been reticent to take on. I certainly think the impacts of COVID, both on financial wellness and just, the benefits and total rewards needs in general, this sort of a little bit lit the fire to say, okay, you've been reticent to go fully digital. Now's really the time to kind of think about that virtual side. I'm curious, you talked about, Mark, I want to dive on one piece of that a little bit more. You talked about just the financial constraints, and you maybe had some financial wellness initiatives that you were getting ready to tackle. They got put on a back burner just because of financial budgetary cuts and things like that. How transparent are you with employees about these choices? How are you talking about budget cuts or things you might do to things like, budget matches or stuff like that? What is the right amount of visibility that's honest, but also, you've got to be careful with employees sort of getting upset with how the company's handling these financial times?
I went through the financial crisis back in 2008, 2009, and there was a lot of stress, a very similar situation in a lot of ways. But I noticed employee base wasn't as understanding about cuts and things that companies had to do to get through that period of time. This time, it seems like the employees are so much open to, yeah, we just want to survive. We want to get on the other side of this. And maybe part of that is because a lot of our employees have gone through that financial crisis. A lot of the millennials, this is their second crisis. And of course, us baby boomers, it's our third, because we went through 9/11 as well. So I think employees are better attuned to the changes that companies have to do and the speed at which they have to do it. So they're more receptive to it. Still doesn't mean they like it, but they're more receptive to it. But I can tell you, our executive team has done just a tremendous job at keeping folks informed. I mean, we had to do things I've never seen before, even of those prior two crises that I mentioned. Cut salaries. We've never cut salaries. I mean, I've been in both those periods. We've delayed merits or canceled merit increases, but never a cut in salary. And most companies, particularly in our industry, have had to cut salaries. And really just informing people that, okay, we're under a temporary restriction, and trying to get back to normal salaries, and communicating that to them when that may occur as best you can without overcommitting, right? Because we knew that there was a potential for a second wave hit. So to go and say we can restore salaries on September 1 was a difficult thing to do that. But we started to restore the salaries gradually, and people saw improvement, and were encouraged by that improvement. We will, on Labor Day, we will go back to full salaries, but there's other things that were impacted, such as incentive compensation. So again, just informing folks, and they just seem so much more receptive to that information, and are very thankful for it. In our industry, the service industry, I'm shocked at the resiliency of the field employees. And again, I think it's a lot to do with the gig economy that is becoming popular. They're just, okay, I can't work at Red Robin today. I'm just going to go work somewhere else. So actually, I think most of the financial pressure came from wage earners that were in the higher categories of wages. And I think some of that is just budgeting, that they were living too close to their means. So educating on our employee base going forward on, proper ways to budget, have emergency funds, things like that. Because those were the groups that really we heard a lot of stress coming from that group.
I think you're so right about a little bit of a different tenor. I worked ran merchandising in retail in 2008. Was a really fun time, I'll tell you. and yeah, there's, we actually ran a survey, Jellyvision, earlier in the pandemic that showed the majority of furloughed workers still had a positive impression of their employer. And I think that there is maybe a little bit more of an acceptance this time around, just that we're all kind of struggling through this and muddling through together. I want to ask one more question before I let you guys off the hook. This has been so insightful and so helpful. I guess, if you were to leave all of the people watching this with some parting words, I mean, what do you think the lasting effects of COVID will be on financial wellness programs? How do you think perhaps employer priorities might be different a few years from now as we get out of the sort of right in front of us COVID impacts? What's to come? Jason, I don't know if you want to go first and tell us what you think.
Yeah, I may be a little repetitive, but I do think employers are going to start to work more with their employees to make benefits more of a lifetime experience, regardless of where you might be employed. So benefits don't always, your needs don't end on December 31st each year, and the employer can't guarantee your job for many years. So ways in which you can make benefits more holistic, I think, are going to carry the day. And I think it's also, to the previous conversation, a way to be much more realistic and candid with the employees about, taking ownership of their own benefits because the employer may not always be there.
Well, I mean, that sounds right up your alley in terms of employees having to take ownership of their own sort of financial situation. Do you agree? What do you think's coming down the pike?
Yeah, I mean, I take like a 10,000 foot level on all of this. It's hard to predict how things are going to go, but I can go back to the fundamentals, and that's that the two most important things in a human's life is their physical well-being. You can't really, function without being healthy and the ability to, be able to interact with the world. And then your finances determine really what you can and cannot do. There's a reason we call it financial health. It functions a lot like your own human health, and you need to take care of it, invest in it. You need to care for it. And it takes conviction from the individual to focus on it, but you also need assistance from others to ensure a long-term continuity and improvement. And so I think over decades, we've seen the employer emerge as a key part of your physical health. And playing a key role there. I think employers are going to continue to look at financial health as the secondary ingredient. And if we look at COVID and the way it's unfolded, unfortunately, in many ways, these two things are very correlated. In fact, the government is really hitting their head against the wall right now, and states and the federal governments are they're hitting their heads trying to figure out, when they focus too much on human health, it seems like the economy suffers. When they focus too much on turning back on the economic engine, people's actual health can suffer. And so these two are inevitably linked. And I think people are now realizing, thanks to the pandemic, whether they've thought of it before, they certainly think of that now. And I think employers need to determine what role they'll play. In good times, financial wellness can be thought of an acquisition and retention tool. How do we attract some of the best talent? We have all these great benefits. And then how do we keep these folks? Well, they're here to stay because of the benefits we provide. But in harder financial times, it's much more about productivity, focus, making sure your employees are not distracted and stressed about their finances. So in good times and bad, we see that financial wellness and investment by employers in it is actually critical to the overall health of the business. And I think we're just going to continue to see that trend pick up more and more coming out of this unfortunate pandemic that we're in.
Mark, I see you nodding. I mean, you guys are obviously an employer who was already down the road of trying to do this. Is this, you may tell me what you think is going to happen, and you may also have, here's what I hope comes out of the next few years, but I see you nodding. What do you think is coming down for the future of Red Robin's view?
Whatever an employer can do to take the stress out of the day-to-day lives of employees, only so much we can do on the health side, right? We can educate on the importance of physical health, which the pandemic is not helping in a lot of ways, right? I moved from the kitchen table to my couch and back, and that's about as much exercise as I'm getting today, particularly in Nashville, where it's about 100 degrees with the humidity here. Educating them on making smart financial decisions and taking the pressure off of just kind of the lack of knowledge there. What keeps me up at night right now, and is really maybe an advantage to really hone in on the education side, financial education, is taxes. I mean, we're going to have to pay as a company or as a country for all the stimulus that we're doing. I mean, I'm not an economist and an expert in that area, but we're paying out a lot of stimulus, and I believe that will continue for the next 3 to 6 months, and we're going to have to pay that bill. So taxes have got to increase, right? So how can we educate employees on really to take advantage of some of the great programs that are there, financial programs, an HSA, a 401k, and other programs that exist, FSAs, to avoid overpaying taxes and saving and meeting your financial goals at the same time. So I think it's a unique opportunity. Even I think folks can understand that taxes are going to most likely go up. So what better time to start really educating all levels of employees on tax advantage programs that exist, and there's not a whole lot of them. Total rewards professionals, if you're not, if you don't have a high deductible plan offering an HSA today, we just put ours in a year ago, and I got a great response out of it. Of course, the employees at all levels in the organization are concerned about security and the risk inherent in such a program, in near-term healthcare costs. So getting those programs started are sometimes really tricky, right? Until somebody builds up, $5,000, $10,000 in HSA, they're walking on eggshells, So, but just really educating on those programs, and then when we're a self-funded plan, so it's tricky too, because in the design aspect of these plans, because the premiums are higher in the better plans and lower in the high deductible, but as we get shift, we get adverse selection and things like that. So it's not an easy landscape for total rewards today, but it's one you kind of got to navigate through.
So helpful. Thank you, Jason, Mark, Will. Really, really appreciate your time. Sounds to me, one of the through lines here is just keeping up the communication, keeping up the human empathy to what people are doing. Strangely, there's an opportunity right now where employees seem to be in it with employers, and they also seem to be ready for some of these messages and tools that maybe you've had all along, but they're just not getting taken advantage of. So how can employers be there to help get those in the hands of employees right now when they particularly need it? I found this very insightful. You're all three really, really helpful and experts in your craft. Thank you for your time. Thanks to everybody who watched this. If you have any questions or follow-up thoughts, please reach out to Jellyvision or reach out to any of these folks, because we'd love to continue the conversation. Thank you so much for your time, and we hope you have a great rest of your day.
Thank you for having us. Have a nice day.